What is happening, everyone, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse of the digital asset world. The markets are moving fast, and if you're not plugged in, you're missing out on the seismic shifts happening right under our noses. Today, we've got a packed show with updates that could redefine your strategy. We're diving deep into the numbers, the big players, and what it all means for you. Let's get right into it. Our first deep dive is into the latest price action. Bitcoin has just seen a significant dip, falling below a key psychological barrier for the first time in weeks. What's driving this correction? We'll break down the profit-taking, technical resistance, and the shifting rate expectations that are keeping traders on the edge of their seats. Plus, we'll look at the ripple effect across the entire altcoin market. Next up, a massive strategic move from a major player in the Bitcoin mining space. We're talking about a colossal investment in cutting-edge technology that could significantly expand their AI computing division. This isn't just about mining anymore. It's about pivoting and leveraging infrastructure for the future. We'll explore the details of this multi-million-dollar deal and what it signals for the broader industry. Then, we're tracking the flow of capital as major institutional players make significant adjustments. Billions are moving out of key crypto funds, and we'll analyze where that money is going and why. Is it a sign of caution or a strategic shift towards other digital assets? Stick around for all the crucial details and analysis. Don't forget to hit that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Market shakeup alert. Get ready, because the digital asset landscape just experienced a significant jolt. Bitcoin, the undisputed leader, has seen its price tumble below the $110,000 mark for the first time in 7 weeks. At the time of this report, Bitcoin is trading hands at approximately $110,184, marking a 1.8% decrease over the last 24 hours. This dip below a critical threshold is the lowest we've seen since early July, sending ripples of concern and speculation through the community. The downward pressure follows a brief but exciting surge on August 22nd, fueled by Federal Reserve Chairman Jerome Powell's hints at a potential easing of monetary policy in September. However, the optimism proved short-lived. Analysts point to a trifecta of factors contributing to this correction: aggressive profit-taking by investors, hitting significant technical resistance levels, and a recalibration of expectations regarding interest rate adjustments. Rachel Lucas, an analyst at BTC Markets, elaborated that the initial positive sentiment from Powell's speech quickly waned as market participants began to reassess the probability and timeline for policy easing. Adding fuel to the fire, reports emerged of a large holder liquidating a substantial 24,000 Bitcoin, which in turn triggered a cascade of liquidations across the derivatives markets, further exacerbating the downturn. Looking ahead, Rick Mita of Presto Research identifies key support levels at $105,000, the breakout zone from June, and the crucial psychological and options strike level at $100,000. A decisive breach below this latter level could initiate a wave of forced deleveraging, potentially leading to steeper declines. The upside appears capped for now, with potential growth limited to the $118,000 $120,000 range until the broader macroeconomic picture clarifies. This volatility isn't isolated to Bitcoin. Ethereum has also seen a significant drop, falling 5.4% to $4,428, with other major altcoins like XRP, Solana, and BNB following suit with considerable losses. Daily liquidation volumes have surged past $929 million, underscoring the intense trading activity and risk management challenges currently facing the market. The sentiment among some key figures in the space, like CoinGecko co-founder Bobby Ong, is that these tough liquidation days are a necessary, albeit painful, part of the market's growth cycle, with the hope that such corrections pave the way for future upward trends. However, prominent critics like Peter Schiff are doubling down on their bearish forecasts, advising investors to sell now and prepare to buy back at significantly lower prices, predicting a drop to as low as $75,000. But is this downturn a sign of deeper issues or just a healthy market correction? Stay tuned as we break down the capital flows and analyst predictions that could shape Bitcoin's next move, and then we'll shift gears to a massive investment shaking up the AI computing world. AI Power-Up. In a move that signals a significant diversification and expansion strategy, Bitcoin miner IREN is making a colossal investment of approximately $193 million to bolster its artificial intelligence cloud computing division. This isn't just a minor upgrade. IREN has acquired a staggering 4,200 NVIDIA Blackwell B200 graphics processors, positioning itself at the forefront of high-performance computing for AI applications. The deal, which includes the cost of essential auxiliary equipment, is a bold statement of intent in a rapidly growing sector. These powerful GPUs will be deployed at IREN's state-of-the-art data center located in Prince George, British Columbia, Canada. This facility boasts a dedicated capacity of 50 MW and has the potential to scale up to accommodate an impressive 20,000 Blackwell graphics processors, offering substantial room for future growth. With this latest acquisition, IREN is set to nearly double its existing GPU fleet, bringing its total to approximately 8,500 NVIDIA devices. This expansion significantly enhances its AI cloud offering, allowing the company to meet escalating demand and capitalize on the burgeoning AI market. The company revealed that a previous batch of processors, valued at $102 million, was financed through a 36-month leasing agreement at a high single-digit interest rate. This strategic financing approach not only allowed IREN to secure critical hardware, but also freed up internal funds for further development initiatives within its AI segment, demonstrating a keen focus on financial flexibility and growth. Daniel Roberts, co-founder and CEO of IREN, expressed his enthusiasm, stating that the expansion of their Blackwell capacities is driven by the aim to meet increased demand and propel the next stage of their AI cloud development, with a clear focus on growing revenue from these cloud technologies. Importantly, IREN plans to maintain its current Bitcoin network hash rate of around 50 AS by leveraging reserve capacities in its other data centers. This strategic balance allows the company to pursue growth in both the digital asset mining and AI computing sectors. Industry observers note that while several major Bitcoin miners are increasingly diversifying into the high-performance computing (HPC) sector, IREN stands out for its aggressive and focused expansion into AI. Competitors like Bitfarms and TeraWulf are also investing heavily in AI infrastructure, sometimes at the expense of their mining operations, while others like Core Scientific and Hive are attempting to balance both. The broader trend highlights a strategic pivot within the mining industry, recognizing the immense potential and profitability of AI computing alongside traditional cryptocurrency mining. This acquisition positions IREN as a key player not only in Bitcoin mining, but also as a significant emerging force in the AI infrastructure landscape. This massive investment in AI hardware is a game changer for IREN, but how is the broader crypto market reacting to these shifts in capital? We'll dive into investor sentiment and fund flows next, and then explore the latest educational push in blockchain technology worldwide. ETFs see major exodus. In a significant turn of events for the cryptocurrency investment landscape, spot Bitcoin ETFs experienced substantial outflows totaling $1.17 billion between August 18th and 22nd. This marks a notable shift after a remarkable 14-week streak of consistent net capital inflows, signaling a potential cooling-off period for institutional interest in Bitcoin. Leading the outflow was BlackRock's iShares Bitcoin Trust, IBIT, which saw investors pull out a considerable $615 million. The sentiment appears to have extended to the second-largest cryptocurrency, as Ethereum-based investment products also recorded outflows amounting to $237.73 million during the same period. This widespread withdrawal suggests a broader reassessment of risk and asset allocation within the crypto market. Analysts are closely watching these movements for clues about future market direction. Vincent Liu, an analyst at CIO Chronos Research, commented to the block that the recent approval of staking for Ethereum-based ETFs could potentially invigorate network activity and spur a rally in altcoins, suggesting that Ethereum is poised to take center stage. This sentiment is echoed by Nick Rack, director at LVRG Research, who noted that several major holders are actively reducing their Bitcoin positions in favor of Ethereum, anticipating further growth for the second-largest cryptocurrency. This capital shift is also being reflected in market dynamics, with Bitcoin's dominance decreasing from 61% at the beginning of the month to approximately 58.17%, according to TradingView data. This trend indicates a reallocation of capital towards altcoins, potentially signaling the early stages of an altcoin season. At the time of this report, Ethereum is trading around $4,592, having recently touched a new all-time high above $4,946. Liu further cautioned that increased volatility is likely in the short to medium term, and traders will be paying close attention to upcoming macroeconomic data, including U.S. unemployment claims scheduled for August 28, which could influence market sentiment. The crypto market had previously seen a positive reaction to Federal Reserve Chairman Jerome Powell's speech, where he hinted at a potential readiness to lower interest rates in September. But the recent outflows suggest that this optimism may be waning or being tempered by other market factors. The substantial outflows from these major ETFs highlight the sensitivity of the crypto market to both macroeconomic indicators and shifting investor sentiment, making it crucial to monitor these trends closely. With significant capital movements underway, it's clear the market is in a state of flux. But what's driving this overall sentiment? We'll explore that in our next segment, examining the global push for blockchain education, and then wrap up with a quick recap of all today's top stories. Global education revolution. In a groundbreaking development that underscores the growing importance of digital assets and decentralized technologies, governments and universities worldwide are aggressively integrating Bitcoin and blockchain education into their academic curricula and policy frameworks. This global push reflects a profound recognition of the transformative potential of these technologies in shaping the future of finance, business, and society. Academic institutions are increasingly partnering with industry leaders to foster innovation and develop a skilled workforce ready to tackle the demands of the digital economy. For instance, Ripple has joined forces with Trinity College Dublin to advance regional blockchain research and development, positioning academia as a critical hub for innovation in the digital asset space. Similarly, MIT's acclaimed Digital Currency Initiative continues to be a leading force in Bitcoin-related research and protocol development, with its director, Neha Narula, emphasizing the crucial role universities play in shaping public discourse and guiding the technological trajectory of blockchain. Governments are also actively championing crypto education. South Korea is set to implement university-level cryptocurrency trading programs by 2025, signaling a significant step toward institutional acceptance and integration of digital assets. In the United States, Iowa's Governor Kim Reynolds has directed a broad expansion of STEM education, with a specific focus on emerging technologies like cryptocurrency, aiming to equip the state's workforce for the evolving digital landscape. Beyond these examples, the movement is truly global. Libya is advancing a multi-year initiative to embed blockchain technology into its higher education system, with plans to extend the program to all 24 public universities to enhance administrative efficiency and data security. In Cameroon, the Ministry of Secondary Education is collaborating with NetDragon to leverage blockchain and AI-driven tools for improving digital education, particularly in underserved regions, aiming to bridge the digital divide. Academic researchers are also contributing significantly to this educational renaissance. Professor Nur K. Shetry from the University of North Carolina at Greensboro is exploring the synergistic impact of AI and blockchain on higher education, examining their roles in cybersecurity and the potential for AI to become a foundational element in university curricula. The long-term implications of these educational initiatives are substantial. As graduates with specialized skills in blockchain and digital assets enter the workforce, They are expected to be powerful drivers of innovation, influence the establishment of industry standards, and contribute to the creation of new market dynamics within the decentralized economy. This widespread integration of blockchain and Bitcoin education into academic programs represents a strategic and forward-thinking response to the evolving digital landscape, ensuring that future professionals are well prepared for the opportunities and challenges of the decentralized future. From market dips to AI investments and global education initiatives, the digital asset space is constantly evolving. We've covered a lot of ground today, and now it's time to bring it all together with a quick recap. Stay tuned. And that's a wrap for today's Bitcoin Bulletin. We saw Bitcoin dip below $110,000 amid profit-taking and shifting rate expectations. Bitcoin miner IREN is making a massive $193 million investment to expand its AI cloud computing division with new NVIDIA GPUs. Plus, Bitcoin ETFs experienced over $1.17 billion in outflows, while Ethereum saw gains, suggesting a potential altcoin rotation. Finally, educational institutions worldwide are integrating Bitcoin and blockchain into their curricula, preparing the next generation for the digital economy. Don't miss out on any of these critical updates. Make sure you're subscribed, hit that like button, ring the notification bell, and follow us on all social media platforms for continuous market insights. See you next time.